What's up, investors? Ken here from Dyslexic Investor, and we'll be looking at the potential next leg up or the next bull market like we had in 2017 into 2018. And that being said, this could be a lot of this momentum could be driven by the China trade deal coming to closure, but there are still a couple other little low-hanging fruit of like Brexit and the impeachment to President Trump. But that aside, we're just going to be looking at the technical know-how. We could be heading to a next leg higher here. So I wanted to kind of highlight this. This is a monthly. Each of these is a month, and this goes back 15 years. So basically 2006 here, and then you have the very bad crash. I don't want black, red. Crash over here. That was, of course, when a lot of bad things happened, and we've recovered from that point and just been riding up again the yellow line. Like the multiple points of this just happened. This year is here, here, and here. So this, what I believe in and what I am looking at, is that history doesn't repeat, it rhymes. So this right here is somewhat equivalent to this right here, even though basically end of 18 to basically majority of 19 in this little box, we really didn't do anything. We just traded sideways, just blah, 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 nothing. Didn't go up, didn't go down, just traded sideways. And that being said, that's basically what happened here. Like if you just cut this in half, chop it down, like we just traded sideways. Right here we went up, right here we consolidated and we went up. That's how I fundamentally and technically understand the market. This right here is a once in a generation kind of thing happening here, which I hope not to see in my lifetime again, but you never know. That it's the stock market. But the thing going forward here is looking at the technicals on, let's drill it down just a little bit. We're going to go jump to the weekly. You can see here the 200 held very well on the weekly chart, and then if we jump back to the monthly chart, multiple times the 34 exponential moving average on the monthly 15-year has held up literally for almost nearly, okay, we're just going to call it 8 years. So that line has held for 8 years. It has never closed below this line. I guess no, it didn't. So this is, if we ever have a retracement and it's steep selling, I would be buying, looking at puts at this level or getting calls once we hit this level. That being said, that's not what we're looking at. We're looking at the fundamentally going to the upside. And what I like to do here is we can do the Fibonacci retracement. So you kind of see here we hit the 261.8 level, and then we kind of went slightly higher from there. We can actually edit this, and we're gonna do, I don't think it's the 4, but it's gonna be, whoa, that was kind of interesting, right? Like that just went up to here on this level where we're kind of currently at, and then I kind of wanted to show this level, oh, not the trend line, do the Fibonacci retracement here, and we're not near it. So potentially we could be ending up in the next year to 18 months at for the SPY to be around $391. So that's interesting, right? Like that's something to look at, fundamentally looking at it. Again, this is just a very skeptical looking at the potential of how high we can go. I wanted to drill down on some more hardened facts that that's a monthly chart. That's super hard to look at. But you can see here on a daily chart, we're holding the 200. The 200 is moving up towards the right, which is very bullish. The thing I'm a little worried about right now, and it's not too concerning yet, is on this chart. This is a weekly chart, so a weekly, each of these is 1 week and it goes back 3 years, is that once we get out of this third deviation channel here, so you can kind of see once we kind of touch it, like, I don't know if you guys can see that, if you touch it right here, kind of didn't touch it there, it kind of gets a pullback. It's just kind of like the way the market trends is kind of like guardrails for your car, and it kind of works on the same on the other side of touch the third deviation. It has to kind of come back towards the middle. Sometimes when it's extremely overblown like this, it's just going to retrace back. That being said, we are not anywhere near those kind of crazy, I hate to use the word overbought levels, and I'm not going to be the one screaming on top of the fence or top of the watchtower or top of the building saying we're overbought kind of thing, because that's just one metric. There has to be multiple other different technical analysis to look at that to make that a true and fair statement. The only thing that I would be looking at is, again, this is a weekly chart, so from in the month of November of 2017 to basically February of 2018, we had a super duper overbought scenario. But what was going on during the time? The tax incentive for corporations were being changed via the tax law that the President Trump put in place, and people were getting ready for that. Like, the market was just flying high. It was just going gangbusters, and that is just knowing the technicals would be like, that makes no sense. But if you add the fundamentals to it, that's an F. It kind of makes more sense. Yes, this is something super hard and that doesn't happen very often, but it's something to be wary of. So if we do get a full trade deal, not a partial or preliminary trade agreement, this thing could run up substantially higher, because I don't think everything's priced in completely. So let's go ahead and just kind of compare this to like a monthly chart, and you kind of see here it still holds true of being basically nearly 3 or 4 months on the oversold, and we're just tapping at the door of the second deviation. So in retrospect, again, like I say, things don't repeat, they kind of rhyme. So this right here is kind of what I'm thinking about is happening right here. So this is the beginning of end of 16, which has kind of been blah, which 19's been kind of blah, and we could be potentially going substantially higher from here for the next year or so, if everything else just gets lined up. So that's my overall understanding and the technical look at. I want to drilling down and figuring out what stocks would be great to hold on this trend, comparing this to other potential stocks at the time, and kind of doing like a pattern recognition, re-engineering, or taking it apart and looking at it differently in the sense of what could be some great trends to jump on board and ride this huge wave higher for the next 12 months. And I'll be making a video about the next wave or the next trend for 2020. I just wanted to kind of give everyone my initial technical understanding of what I see happening in the market today. Again, these are just my opinions, so don't think that this is gospel and then trade on this, and just do your own due diligence or DD, and be safe out there. Again, this is Ken from the Dyslexic Investor. Catch you guys on the flip side. Peace.